so you get to trade it. Welcome in everyone in chat. A couple of you already getting in here. US dollar Japanese yen is insane. That's the topic today. We are going to do a big bite on US dollar Japanese yen. Look at the smile on this man's face when I mentioned that pair. It is by far his favorite. Guys, without further ado, let's get into Market Wake Up. It's good to be back. It's good to be back. It's a beautiful sunny day. The golf clubs are shining behind me. You can see the shadows, 33 degrees and nothing but blue skies here today. John, you look a little chilly.
Yeah, it's colder. It's colder. I've got the jumper on today. Got the jumper shirt combo. You know that's when it's cold.
That's when you know that's Wednesday. But no, happy. Geez, I forget what day it is. Tuesday.
It's only Tuesday, Jordan.
It's only Tuesday, John. Jesus, we just started the week, but no, happy Tuesday to everyone. Tell us where you're tuning in from. I can see Ampho, I think it is, or Paulus. I'll go with Paulus because that's easier to say. Good morning to you, Musclay, Paul as well, popping in. If you guys are here, give us a wave. Tell us where you're tuning in from. John, good morning to you. You were just waking up. You're seeing the markets for the first time this morning. Anything got your attention?
No. It's been so quiet, hasn't it? Yesterday there wasn't too much in the way of data either. I was looking at the bill today. Again, there's nothing much really coming up until later this afternoon when the US session starts kicking in terms of European session. Yeah, nothing really going on at the moment in the European session. So very, very quiet on that front. There's been no major headline risk overnight either, which is fairly good as well, considering we're not waking up to big surprises. So that's nice. But yeah, other than that, it's been fairly slow. I've not really touched upon much this week. I've been kind of checking out oil markets a little bit because obviously we saw that gap lower, and I was quite interested to see whether this would be something that is, sustained or whether it be like, because I think a lot of retail traders would see that gap and be like, right, let's buy oil, because they assume the gap's going to be filled pretty quickly. But that's not always the case. A gap can take a while to be refilled. Don't get me wrong. If we do start to see prices move higher, I do expect it to close. But there's a lot of situations where it can be 2-3 weeks down the line and then before it starts making its way back.
The thing with gap, I love gap fills. I love trading them. Specifically in FX, I love trading gap fills because the gaps don't come very often. People freak out because they're so uncommon in this industry, and they're really nice to move. The gap in the oil market, anytime there is a gap, you've got to ask why. You've got to ask, why did this gap happen? Is it a good reason or is it a bad reason? Is it an authentic gap or are people just panicking? Okay. Now, this gap happened when Israel hit Iran. And it looked like they nailed the military targets and stuff like that. So it didn't seem like oil was involved. I did some digging today. And it does actually look like they hit a oil refinery in Abadan. Now, it's unclear whether or not this was a misfired missile defense rocket from Iran or whether this was an Israeli missile that hit it. However, an Israeli executive did mention that they intended to hit this spot. So maybe they did go. It's not being heavily reported, but maybe they did go after the oil refineries. It's what I would do. We've spoke about this openly. Yeah. If you're going to war with a company and you have a company, if you're going to war with a country and you have the ability to cripple their economy, you're going to cripple their economy. Like you're going to hit the oil.
And it seemed strange to me that the market reacted so aggressively to them not targeting the energy facilities. I was just a bit like, well, that seems to be a bit of a risky trade, right? oh, they haven't hit them. Let's go sell oil. That doesn't sit quite well with me because you just don't know. Well, one that we spoke about yesterday, you don't know what the truth is really, because Iran aren't going to come out and say, yeah, they destroyed our stuff, are they? Because that's just going to cripple them. So
and vice versa, Israel aren't going to say, that missile attempt was an absolute failure. Why would you? Well, who's openly going to say, "Hey, we suck"?
Yeah, exactly. So I think that move in oil is interesting because I just don't see. So I was kind of looking into them. What is the downside going to come from as well? Like, typical indicators that we would look at, sort of supply, demand, X, Y, and Z. And yes, between sort of October and December, oil prices are typically lower. We usually do see that sort of demand fall away, and we do see, oil prices trend lower, and usually through those periods in time. So I was looking at that and thinking, well, is this just an over-exaggerated move that we're seeing because the data is obviously making it so? And then I was just kind of thinking about, well, can we fade it at some point? Is there going to be a point of fading that? And that's what I'm really interested in, because I just don't see the value right now in that gap lower. I just don't see the value in it. So I'm keeping an open eye on it. So yeah, that's been my day yesterday, really.
That's what you got to look at with gap. Gaps are an incredible amount of movement in price in a short amount of time.
Yeah.
Right, during a closed market. So they show either fear, greed, or catalyst. Fear, greed, or catalyst, right? And it's our job as traders to decipher that. Is it an overreaction? 9 times out of 10, it usually ends up being an overreaction. Or does the data suggest? Now, this is the beauty of macro trading, and this is why we are advocates for incorporating some kind of macro into trading. Because you guys that have been here for a little while, for you guys are new, I'll run you through. The events we've been through this year have been unimaginable in a macro landscape. How quickly things are changing when you're looking at currencies across the globe, when you're looking at commodities across the globe. How quickly things have changed has been remarkable. One thing that we have done, John, and I haven't boasted about this, but one thing that we have done really, really well is choose when a move is validated and when it's not.
Right, yeah.
One thing we have consistently picked is when we get a big move in the chart going, yep, that makes sense, or no, this doesn't make sense, and making money on it. And, there's prime examples. Bank of Japan, the carry trade unravel, it moved really quick. Most people were jumping on the back, oh, look, it's come down, it's buy. And it was all the matter. We did a whole presentation on it. Has the data changed? The answer was yes. That means it's validated. Don't try and short that. That's just not going to be fun. And then there's been other examples. I've just gone completely blank thinking about it. But there has been times where the charts have completely moved and you go, has the data changed? And it hadn't. It hadn't changed at all. Yeah. And lo and behold, those moves were faded ever so quickly.
Yeah, it's like when the euro against the dollar was raging higher, and I was just like, I just can't see that. I don't see the value in that at all. And then obviously it only took a very small, at the time, it only took a very small bit of a dollar move to really then, see that euro dollar chart completely flip, and it has continued to drop. So yeah.
Trade macro, goddammit. How many times I got to yell? Trade macro, no macro, understand macro. I can't say the last bit. It's made me more money. I can say that. I can't say it that way, but I can say it this way. Look, John, look at me. Don't look anywhere else. VIX, where are we at?
Well, I know it climbed yesterday, so I'm going higher. I'm going to go higher.
You're going higher? Okay.
Yesterday was around the 19s, I believe. I don't think we're going to have touched into the 20s. I say 19.7.
19.78. 19.7.
I'll take that.
Look at the joy. Look at the joy. It is 19.78 is where the VIX. We did get into the 20s. We did. We've come down from it, but we did get up into the 20s of the VIX there. It's the volatility index on the S&P 500 for you guys that don't know. It's a really good measure of how quick charts are moving and how scared people are. The VIX is a great little tool. If you're seeing this uptick, it usually means head towards risk-off assets or have a look at how quickly things are moving. If you see this downtick, people are more stable. They're thinking smarter. They're thinking better. Money is injected into more risk-on assets, and it's a good, nice little correlation you can find there. We check the VIX every day here at Market Wake Up because it gives us a good indication of what's going on and what the overall sentiment is for investors moving into today, which is the 29th of October, moving to the end of October. And then I'll run you through all the main assets or the key assets in my eyes on where we're at. And there's a couple of good ones today that I want to share with you. So you ready? You ready, John? You nailed the VIX.
I'm ready.
Are you ready to hear where things have moved?
Yeah, go for it.
Beautiful. Aussie dollar is pretty much unchanged. Under 0.1 is pretty much unchanged for me, okay? Aussie dollar is unchanged, euro unchanged, the pound is up 0.12, US dollar CAD unchanged, US dollar Japanese yen up 0.1. We'll touch a lot on US dollar Japanese yen today, so if you do trade US dollar Japanese yen, make sure you stick around for the big bite. XJO is relatively unchanged. The DAX is up 0.43%, the Nikkei up 1.43%, the FTSE is up 0.2%, and the S&P 500 relatively unchanged this morning in pre-market. Coffee's up 2%, gold's up 0.3%, nat gas up 0.3%, silver up 1.3%, sugar up 0.3%, and oil down 0.12%, actually holding that gap right now. We dropped down and it's sitting there and it's holding it, much like the Japanese yen. Bitcoin up 1.7%. Welcome back to the conversation, cryptocurrencies. And Ethereum up 2.28% as well. Then you're having a look across the bond yields. What's really interesting today is the Aussie 10-year bond has dropped by 0.23%, but the 30-year bond has actually gone up by 0.03%. So we're seeing a miscorrelation between the movements in Australian 10-year and 30-year bonds. When you have a look at the US bonds, however, both moving towards the downside, which does bring those yields a little bit higher, potentially a little bit more attractive for people to get into the bond market later on.
Yeah, the US yields moving a lot higher at the moment, aren't they? So yeah, quite an interesting setup going on over there. I've heard a lot of talk recently about the potential for 10-year yields to be back at 5%. And obviously when that was happening, obviously dollar was on a good tear higher at that time. So yeah, very interesting market setups at the moment. Silver doing better, which is good. We've talked a lot about silver longs this year, and now we're trading sort of
the $34 mark. I mean, come on.
Yeah, so that's doing pretty well. I haven't actually managed to get back into a couple of moves there.
You haven't?
Unfortunately, no. So
no. We were saying buy silver at 28. Buy. We haven't even bought silver at. Well, I did buy silver at 28. I ran it to 29 and went, look at me, I'm a god. And now it's gone to 34.
Yeah, well, yes, very similar to me. I was buying it down at the 28s after you kind of did a really good deep dive analysis on it, so I ended up getting involved there. But yeah, Sam, I got it around about the 31s, but this has gone. We did talk about the idea of it going past 32, and beyond, and up to sort of the $35, $36 area. But yeah, it seems to be that it's kind of gone, and it's gone without me. So I'm a little bit gutted about that one. But other than that, markets are shaping up quite nicely. We obviously going into an interesting couple of weeks. This week we've got NFP at the end of this week, which is the last NFP reading before the election. And then we've got core PCE price index as well coming out later in the week as well. So this is going to be an interesting setup going into the election, I feel. Are we going to see the market ignore this type of data, or,
popcorn? Yeah, everyone get the popcorn. Thank you for sending the virtual coffee in the wild. What's your coffee order? Because the other day John put honey in his coffee and I hated it, and I hope he's never done it again. Right, but I want to know what your coffee order is in the wild. And Marina, welcome in as well. You've been popping up the last couple of streams. I want to say thank you for the support coming in. I hope you're enjoying it. Where are you tuning in from? Let us know. Get personal. Let's get the community going. Let's get everyone chatting up. Today you mentioned, we've got Jolt's jobs a little bit later. And then tomorrow morning, you're late tonight, the greatest currency on earth is going to release CPI data, both year on year and quarter on quarter. So it's going to be important to actually have a look into that, because the RBA is in a very sticky state. We are expected to see growth on the quarter of CPI. Obviously a big downtick into 2.3 is the forecast year over year. If we get into 2.3, that is obviously cut territory for the RBA. Do they actually want to? I doubt it, but let's see. It also is very dependent on China.
Yes, very dependent. I think we're actually going to talk about the Australian dollar going into tomorrow's session. I think I've put that on the cards for us, so that'll be a big feature of the big bite going into tomorrow. So if you are a trader of the Australian dollar versus the US dollar, you can join us at the same time tomorrow, and I'll give us a deep dive into that.
I like it. Hopefully I can add a couple of accents to it just to make it a little bit more fruity. But let's get into the big bite. We're going to talk US dollar Japanese yen. We're going to talk US dollar Japanese yen. The reason we're going to talk US dollar Japanese yen is because it puts a smile on this guy's face. No, not really. Because there's a lot going on in the political landscape. There's a lot going on in the forecasting landscape. I'm going to get you up to date with why this chart looks the way it does and my opinion on where we go next. Okay. Now, everything I do say here is my personal opinion. There is no statistical edge in anything that I'm about to say because I don't trade Japanese elections. I very rarely trade US elections, but we're going to dive into it. We're going to have a little bit of fun and we're going to challenge it. Morning, Paulus is from South Africa. Good morning to you. You're an espresso or cappuccino, man. Strong Mediterranean style, no sugar. No sugar on the end there. Like full stop, no sugar. Full stop. That's like I'll take a rum on the rocks. That's what that is. It's just
sounds like a bit of usual.
Just that on the rocks. That's what he said. But that's good. All right, US dollar Japanese yen. You mentioned yesterday the Japanese election. Is it the LPD? That's wrong.
LDP.
That is definitely wrong. LDP. That's right. I got the letters wrong. Obviously, it wasn't great. It wasn't great. They didn't win a majority. Didn't win a majority, which means it is a little bit harder to pass new policy changes because they have to verify it through other parties and they have to go through a whole debate process and blah, 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 right? Now, usually you just think, oh, they're not going to fix the potholes down the road, right? Like this is going to be like local government problem. The interesting thing with where Japan is right now is their economy is at a point where the Bank of Japan want to increase interest rates and do it as much as they possibly can because they want to increase demand into the Japanese yen. The Japanese yen has been shorted way too much over the past 3 years. It needs more demand. It needs more value. The problem with that is if they hike interest rates, they will cripple the economy because the economy has not been very strong. Why? The Japanese yen's been very weak. Right? So you've got the Bank of Japan, which are moving towards wanting to hike. Now, you can manage to do this very sneakily by a thing called fiscal policy, right? So you can change monetary policy, which is your interest rate, but then the governments can change fiscal policy to almost hedge their bets. So while they do one thing and it's perceived by investors to go this way to increase demands for the currency, the local government, well, actual federal government, not local, can change the fiscal policy so it pretty much just undoes what the other does and they can trick investors to invest in the Japanese yen. The problem is they no longer have a majority, which means if they want to change fiscal policy, they have to go through their competitors. They have to sign off on it as well, which makes it extremely, extremely difficult to do. And if you can't justify a good reason to change fiscal policy, it's not going to happen. Yeah. And this is a really, really interesting scenario that we're seeing unfold because of that exact thing. In order for the Bank of Japan to do what it wants and to drive demand back into the yen, which you can see happened here, in order to continue that, they need to keep those interest rates hiking. The problem is CPI's come into what, 1.7? I think inflation's come into 1.7 in Japan. Unemployment came out today 2.4, down from 2.5. Data's looking pretty healthy. It's looking healthy to the point where if you hike, you're going to cripple it. You're actually going to hurt and you're going to send everyone into a deflationary environment. So they really need, for the Bank of Japan's plan to work, they really need fiscal policy change. And with this new government coming in and not winning the majority, I'm going to sit on a throne and say it's not coming. I don't think they can change fiscal policy.
No. I mean, I think that's the whole reason why there's been a lot of change in Japan at the moment, is that there's been a lot of controversy over where they go next with how they see interest rates. I think inflation has when you look at Japan's inflation, 1.7 is a little bit higher than your average central bank, right? But or your average country, but it's not at a place where it's, you know, out of control. Wages have gone up in Japan. There was a big thing about that over the last year or so, but wages have increased in line with inflation, which was highs, I think it was around 2.7%, something like that. So they did get their wage increase. And again, that was part of the sort of equation of what could happen with interest rates going forward, because the idea was that, you know, when you increase wages, people have more money to spend, X, Y, and Z, you know, and then that obviously creates a lot of demand for products, and that can obviously increase the inflation outlook as well. So I think they're in a bit of a weird state anyway, aren't they? Because I don't think that the data is not necessarily that of, okay, we've got to aggressively hike now.
No, the data says don't. If anything, the data says, hey, let's lean towards cuts.
It's just, yeah, well, yeah, on my side, it's a mid-ground. I feel like it's just at a mid-ground. I think it's at a point where they don't need to necessarily do anything right now.
The trends aren't pretty. I mean, let me challenge it, okay? CPI come down. It's at a pretty number, but the trends suggest it's going to continue to fall. Factory PMI, which is incredibly important in Japan because manufacturing is huge in Japan, for 4 consecutive months has dropped and it is now below 50. It's at 49, which still, that number